Thank you for joining us at XM.com. This is the week ahead. 2 central bank meetings and the latest employment report from the United States will definitely attract investors' attention this upcoming week. I'm Cristina Marujos. With me today is our lead investment analyst, Rafi Boyajian. Rafi, the Reserve Bank of Australia meets on Tuesday. There is quite a bit of uncertainty as to what to expect after the bank skipped a hike in July. How likely do you think is a rate hike in August, though?
Well, Christina, we've got a bit of a split between what the markets think and what analysts are expecting. So the markets are pretty convinced, or not entirely convinced, but the odds are around 70 to 30% that they will leave rates on hold, but economists think that we may get a 25 basis point rate hike. And that is because back in July, the decision to hold rates steady was, in fact, a very close call. And they pointed to the August meeting as to when they will reassess this situation. It's also worth mentioning that we will be getting updated economic projections later in the week on Friday. So it is possible that the bank may decide that although inflation is cooling in Australia, maybe it's not cooling fast enough. There's also the risk of a tight labor market that it might spur higher wage growth. But the point is, though, why markets are not maybe a little bit less pessimistic is because the June data has been pretty bad so far. The PMIs pointed to contracting economic activity. We also got some poor retail sales. So it's quite possible that the RBA will be cautious and stay on pause, at least for another meeting. But the outlook might be looking somewhat better now that China has announced some additional stimulus measures. So even if they do keep rates on hold, we certainly cannot rule out future rate increases. So I think the least dovish scenario is that the RBA, they're going to, if they stay on hold, it's going to be a hawkish hold. So that would keep supporting the Australian dollar.
On the other hand, Rafi, we have the Bank of England. It meets on Thursday, and it is certain it will hike again. However, the question is, how big a rate hike will it deliver this week?
Well, that is right. So clearly, inflation in the UK remains way too high, even though it has started to, the descent in inflation has started to accelerate, but they've got a long way to go, a lot longer than other central banks. So clearly, they need to keep on tightening until inflation gets a lot closer to 2%. And more importantly, core inflation starts to come down more substantially. But as we're seeing in the euro area, UK economic activity is also kind of deteriorating. The July PMIs were not very encouraging. So it's probably unlikely that the bank would feel confident enough to raise rates by 50 basis points. I mean, of course, it is possible that we may get such a surprise. But now that inflation has started to, moderate a lot more substantially, I think the bank will be they're going to be satisfied to go with just 25 basis points. But, for the pound, I think what might matter more is what the Bank of England is going to say in its latest inflation monetary policy report. So if they see inflation not falling fast enough in the next 2 to 3 years, then that might be supportive for sterling. But if they fairly confident that inflation might come down within 2% within 2 years, then I think that could potentially be negative for sterling.
Now let's turn to the data front. Earlier this week, we heard Fed Chair Powell say that the committee will be data dependent moving forward regarding future policy, thus putting that much more importance on the Nonfarm Payrolls report out on Friday. What are we likely to see in the data, and how could the dollar perform?
Well, that is right. So the Fed Chair Powell really kept the door wide open to either outcome in September that they may raise rates, they may not. So it's all going to come down to the data. And of course, as you said, the jobs data will be critical. So we finally started to see back in the June jobs report that maybe things are starting to cool off a little bit in the US labor market. And we're likely to see more of that in July. We're expecting to get a print of 184,000 for non-farm payrolls. Jobless rate, though, remains at 3.6%. Wage growth has started to accelerate a little bit lately. So that's a bit of a concern, and it's going to be important to see whether or not that is continuing to accelerate there or it's going to moderate. And also we're going to be getting the ISM PMIs, the manufacturing and non-manufacturing PMIs, which are also pretty important too, to get a more forward-looking data in terms of what's happening in terms of output prices in the US economy, in terms of hiring. So if overall the data is a lot stronger than expected, that could in fact bolster the dollar, because the markets would up their bets that we will in fact be getting another rate hike from the Fed.
And Rafi, before I let you go, is there anything else on this upcoming week's calendar investors should keep an eye out?
Well, we should be keeping an eye out for on Monday, if we're going to get a bunch of Eurozone data. We're going to get the flash CPIs, as well as the preliminary reading for second quarter GDP for the Euro area. So we just had the ECB meeting, of course. Lagarde was suggesting that the ECB may pause that, or maybe in fact they have already paused. They're not certain if they're going to raise interest rates, and that came on the back of the recent data showing inflation is falling pretty fast now in the Euro area. So inflation is expected to drop to 5.3% in July. If we get a hotter print than that, then we could see again bets rising that the ECB may not be done after all. And GDP, there's concerns about a recession, although we got some GDP revisions that showed that the Eurozone was not in a technical recession after all, but that's not to say that they're not headed there. Looking at the data, we may well see late in the second half of this year, but for now, for the second quarter, GDP should show an expansion of 0.1%. So I think the euro will be extremely sensitive to what we're going to get, because basically September is a live meeting.
Thanks, Rafi. Great having you with me today. This was The Week Ahead here at xm.com.